Alright, what is going on everybody on YouTube? Griffin here coming back to you guys with another live stream finally from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, if you're going to be tuning in for the first time, we'd love to have you here for future streams and future videos. Definitely consider hitting that subscribe button below. Make sure you hit the bell icon right beside it. That way you'll be notified every time we go live or upload another video. Usually we try to go live a minimum of about 2 times a week. Usually we do like a Sunday stock talk, stock watch kind of thing where we come and just break down the market for the week, for the upcoming week. And if you guys have any stocks or anything you want me to take a look at, then I'm always willing to look at those for you guys. And then I try to also upload either a video or try to go live also at least once at the minimum throughout the week. Obviously I've been gone, I don't know how long it's been now. I want to say it's been at least a couple weeks. I know it was sometime back in early to mid-June, so it might have even been a month now, but somewhere around 2 to 4 weeks. But trying to get back into a normal swing of things. We've had a lot going on lately. We actually had puppies that were completely unexpected. Had a little vacation because I haven't taken one yet this year. Took a solid week or so off, so that was fun to rejuvenate myself. And we actually had our best week ever, and I mean ever, trading in the markets on that week. So that was very encouraging, and this week so far has been good as well. And that's really what today's video is going to be about. We're going to break down the market a little bit, but I'm just going to overall break down what all has been going on with my portfolio, the ups, the downs, the good, the bad, the ugly, the hideous, all that good stuff. Just because, like I said, I made this channel, I'm running this channel essentially to show newer traders what not to do, what I've learned, what's working, what's not working. I try so many different things, and when I find stuff that works, I try to do it until it doesn't work anymore, essentially. And then, of course, you got to pivot. The market's always changing. Nothing that you do every day, day in and day out, is going to work forever. You have to be able to pivot and try new things out, essentially. And so, yeah, with that, I just want to make sure our stream quality is up to par. Make sure we're up, live, and going. I see we got 2 of you already in here already. And like I said, if anyone's tuning in for the first time, we'd love to have you here for those future streams. So hit that subscribe button below with the bell icon, and that way you'll be notified every time we go live. And if you enjoy the stream, make sure you smash the thumbs up button. Apparently that really helps the videos, helps the channel out more than ever, apparently, from what YouTube's been saying recently. So I definitely appreciate that. So let's just actually go in here and just take a look at, we'll go ahead and just open this up for you guys. So as you all can see, those of you in Discord have known everything essentially that's been going on over the last month or so. But for those of you that aren't in our Discord group chat, which I definitely suggest you join that, it's totally free. We don't charge for anything over here. The link for that's in the description box. There's almost 200 of you now, about 190, 195 of us in there. So we'd love to hit 200 members in there. But as you can see, our overall profit loss year today is a little over $1,300. However, our commissions is somewhere around $400. So we're actually, I think it's a little bit more than 400. It's between $400 and $500. As you can see here, we're at 1330.85. It's a little bit different than when I looked earlier. I was actually higher. Oh, this isn't my actual. Let me get it pulled up. It's easier to tell on my phone. So I was like, these numbers aren't adding up. I never use the laptop version, if you guys didn't know. So yeah, we have paid $425 in commissions and fees, $425.32 to be exact. Our total available funds is now 13,385.85. So, and we've put a total amount of I believe $12,000 in the portfolio, and that is exactly what we're going to just dive into. Is we will just straight up show it all, essentially. So let's see, is this all time? I think this might be my all-time, actually. So show account statement, 30 days. Okay, so this is over the last 30 days since essentially we've gone live last, roughly. I know it's been somewhere around 2 to 4 weeks. So as you can see, we have been busy over the last 30 days. So you can see we've done a total of 200 orders with 224 fills. So again, keep in mind 200 orders, 224 fills, whatever, does not mean this is literally how many day trades, how many swing trades. This is just simply orders. So how I like to kind of explain it is just divided by 2, and that's essentially how many quote-unquote trades that I did, roughly, right? Because an order is just simply buy, and then another order would be sell. So you're talking about roughly 100 to 120 probably actual full-on trades. A lot of my trades recently, the ones that have been most successful, I kind of average into them, as you can see, and then I kind of hedge myself against it a little bit, and then I buy more, and then I start selling as I become profitable, which this week so far we're up. Let me see. So far this week we are up about $600. Not quite. We ended the week last week with an account balance of around $13,375, roughly, something like that. Right now we're at $13,905. Yeah, $13,905. So that means we are up not quite $600. If the rest of the week goes well, though, we will be up well over $600. Today we were up almost, I think it was like $300 to $400. I think at one point it was like $390. It fluctuates a lot, of course, when you're trading futures. Your profit loss on the day fluctuates tremendously. But right now we are actually currently very hedged. Actually, if we just go over here first, we'll take a look at our actual positions. So we have actually 2 vertical call spreads on SPY, which I might have to roll these out a little bit, collect a little bit. If we can get some more premium and potentially roll this up to like the 3, what I would like to do, if I have to roll it, hopefully I don't have to roll it, but if I have to roll it up, then hopefully I can get in somewhere around 323 to 326 on my upside call, and like I said, hopefully we'll at least be able to collect a premium, not have to pay a debt on that, because we don't want to roll it if we have to pay a debt, unless if the trade is just going completely against us, of course. But we're keeping our eye close on this. So pretty much as long as S&P 500 stays below my break even somewhere around 3,200, which is 320 roughly on SPY, we will be okay. I prefer to stay under 3190 just to be on the safe side. But these actually expire on July 24th. I've actually held these for a little longer than I wanted to. Originally, I only wanted to hold them for about a week or less. And I've been in those for, I don't know exactly. We'll go back over here to account statement. I know we've been in this for about a week already. So let's see, we're future vertical. Okay, so we bought this on the 2nd. So yeah, tomorrow we will have been in this for a week now. And like I said, we got 2 of them. And all that we're pretty much saying is we were betting that the S&P 500 is pretty much going to stay right around 3190 to 3200 or below that over the next, pretty much the month of July, essentially. And why did I think that? Because when we go back and just look at the daily chart, we can see right around 3190, the market did not like it whatsoever. We got above 3200 briefly, right around 3230, and then obviously we had that massive 6-7% flush in one day, and then we've really just been consolidating ever since. And on these past few green days, going back into the end of last week, I decided, you know what, I'm going to go ahead and, even though I'm long on the market, I want to hedge myself a little bit, give myself a little bit of protection, and just place some vertical call spreads on SPY. And as long as SPY stays below this over the next few weeks, I will make a few, I forget what it is, I think my max profit potential is somewhere around like $200, and the max I'm risking is somewhere around $400, like $380 if I remember right. So not a lot of risk really. I mean, the risk reward is definitely well. You guys know I'm only looking for usually about 50% of the max potential profit. So you're talking about roughly a 25 to 30% return potential. Nothing major again. It's just more of a hedge than anything at the time. But now I'm holding it a little longer than I wanted to. I only wanted to hold it for about 5 to 10 days, so we're getting into the meat of that now. And pretty much what I'm banking on is we're probably going to retest 3100 to 3125. We did so when we go back and look at the 5-day chart. We did so actually multiple times. But I was surprised. 31.30 pretty much held its ground pretty well overnight, and in this market, this past previous trading session today as well. But we're in a very, very tight range right now. This 31.30 to call it 31.70. This range is real tight right now. So we're either getting ready to break out to the upside more than likely and retest 3,200, or we could potentially come back down and maybe even retest 3090 to 3100. I'm actually in the camp where I think we're probably going to retest 3090 to 3100 before really trying to take a next leg higher, just because when we look at the overall markets, I mean, don't get me wrong, we have plenty of room where we could by all means break out and break to the upside. It wouldn't surprise me at all. But at the same time, we also got a lot of room to potentially move down if we want to. Now, I'm not thinking we're going to come down to 2,800 or anything ridiculous. I'm thinking that, if anything, worst case scenario, pull it in here, worst case scenario, we come back to around the 200 SMA, come down to around 30.25. We probably bounce off of that, worst case scenario, and then we continue to consolidate a little bit more and probably end up breaking out to the upside. As we get closer to election season, expect a whole lot of consolidation. If we stay between 3,000 and call it 3,250 all the way to the election, that would not surprise me whatsoever. But ultimately, I think we're going to end up breaking to one side or the other. But there's so many things going on, of course, and we'll just have to see what happens. But again, going back to just my overall portfolio, I'm pretty neutral right now. I'm slightly bearish in the sense that I do have those vertical call spreads, but as you can see, I have one September short and then I have one December long. They're pretty much canceling each other out for the time being. Obviously, if you look overall at the profit loss, it's slightly to the downside, but I'm not worried about it whatsoever, just because obviously they're canceling each other out. And my plan is if we continue to go down, I'm not going to add any shorts or anything, but if we continue to go down, then I will end up closing the shorts, assuming that we test 3090 to 3100, and then at that point I will go pretty heavy in longs at that point. So, now, finally, to the massive account statement. I'm not going to go through every trade, or else we would be here until this time tomorrow. But I'll just kind of try to point out the ones where what went wrong, the trades where things went real good. Like I said, the good, the bad, the ugly, the hideous. So, we'll go all the way back here to... see if we can get it pulled up here. Go back to around, I guess we'll just start from around the big drop in early June. I think that was like June 10th to June 12th, somewhere around there. So as you can see, we started playing around again with the micro futures a little while back. We actually briefly traded the ES, the big one, and that's what I was actually trying to find for you guys, because that is where the ugly occurred, and not even the ugly, the horrible. That is where the horrible occurred. I've been paper trading those for a while and been pretty successful, but I'm not going to lie. In my opinion, after trading the ES, which obviously requires like $13,000 capital right now because all of the margins are increased due to the extreme volatility, and I cannot seem to find my ES trades for some reason. In my opinion, you should not trade ES until you have at least a minimum of $50,000 in your portfolio. That is just my own opinion. Do whatever you wish, of course. I mean, I went and tried it myself just because it was itching at me for the longest. I can't find it for some reason. Let me actually just look it up. Was it more than 30 days ago? Okay, apparently I can't go that far back. I'm trying to find my ES trades for you guys, but in my opinion, no one should really trade that until they are like I said, minimum $50,000 in your portfolio, just simply because it's so volatile and you need to slowly. I call it like scaling up, essentially. You need to scale up your portfolio. So start out with just trading the micro, because at least with the micro, you're not talking thousands of dollars. I mean, obviously, if you buy enough contracts, it could be thousands of dollars. But say you're buying just 2 or 3 contracts, and you do like what I've been doing, which is what I'm going to show you guys here in a minute, which has worked the best for me. You're just talking. Say you start out with 1 contract, you're down 10 points. You're only down $50. You're down 10 points on ES. You're down 500 right out of the gate. And the psychological effect, you just start messing up. You do things that you normally wouldn't do. I caught myself just being super quick to cover profits. I was covering. My first day was actually pretty good. I covered somewhere around $100 of profit my first day, simply just scalping. And we're talking less than a minute per trade. I was scalping it, and then I got a little cocky, essentially, placed a trade, and then I think that trade went down $425 in 2 minutes, and it scared the hell out of me, and I closed it. If I had just held it, I would have ended up making $500. But again, I was just sitting there scalping it, not doing things that I was normally doing with ES when I was paper trading. And I think a lot of that is because it was literally putting, at that time, pretty much, and even if I were today, which would be stupid, I'm not going to, it'd be like putting in your whole portfolio. So you're scared. It's just the psychological effect. I can't explain it any other way. Like I said, I wouldn't be surprised if someone goes out and does it anyways, but like I said, start with MES. Start out with the micros. I cannot suggest that enough. So it was ugly. I mean, that's where a lot of our losses came from. So we started on the 5th. Like I said, we had a lot. Look at how quick these are. I mean, that was a 21-second trade. 21-second trade. We sold a half a point. $50 after fees and commissions, $43. A quick win. Then we shorted. We had another half a point. Right? Yeah, we had another half a point, so another $50. Then we shorted again. Another, right? So try to make sure I don't get it messed up. So half a point, and then we sold again. Went short here. And then another half a point. But as you can see, I mean, it was just ridiculous. This is not how I was trading it when I was paper trading it. But whenever psychology comes in, you're trading with your real cash. I'm not going to lie. I mean, it's super difficult to go from the paper money to cash, of course. And like I said, to me, it all has to do with scaling. If I had a $50,000 portfolio and I was just buying 1 ES contract, which in the future will go back down to $7,000 a trade, when I'm only using $7,000 of a $50,000 portfolio, I'm not as worried about it, because say the trade starts to go against me, just like with the micros, I'll average into the position, because I know within minutes usually, or hours at the most, the trade usually ends up going in my favor. So if anything, I'll average into the position and then make my money as it either goes up or goes down, whichever way that I'm going for, essentially. But what really, really hurt us the most was the final trade, which is where I finally just said I'm not trading these anymore. We got stopped out. We set a stop loss, which I do not use stop losses usually, but I was like, you know what? I'm going to let this one ride. I'm just going to set a stop loss at -9 points, and if worse comes to worse, if that gets hit, then I'm just, that's it. And this was actually one of the longer ones we held, actually. We held it for about half an hour. And yeah, 9 points, so 9 times 50, that was about a $450 after fees and commissions, about $460 loss. So after that, I was just like, you know what, we're done here. We had lost all of our total profit that we've had year to date. Thankfully, we've gained that back and then some, but yeah, so lesson there was just don't worry about trading ES whatsoever until you've got, in my opinion, this is just my own opinion, I won't trade it until I have at least $50,000 in my portfolio, and not just the amount of money, because just because you have $100,000 or $1 million in a portfolio doesn't mean that you should hop into something you don't completely understand and have a method that works. Not that at all. So I want to have 50 grand in the portfolio, and I have to prove over however long it takes for me to get there that what I'm doing with the micros works, because the micros and the actual E-minis, it's the same thing. So I mean, literally, if your style works with the micros, it will work with ES as well. It's just one is 10 times the value of the other. Your moves are going to be 10x. So if I can prove that I can grow my portfolio to 50 grand, and that my strategy works, then at that point I might look at trying it again. But for now, I personally am just going to stick with the micros. I've had much more success with those. It took a little bit of tweaking at first, and that's what we'll get into now, is just like the overall, we'll just go back to 30 days again, and we'll just do all of them. I don't want to do just ES. Let's see if we can do this again. Let's do all. It's not letting me delete it and let it stay out for some reason. Oh, that's annoying. Oh, it's actually dropping. So let's go back here. Alright, this is getting frustrating. I just want to show. Don't want to show by symbol. I guess we can just go to MES. Just make it easier that way. So now we can do 30 days. This is very frustrating. Like I said, I don't use the Thinkorswim platform. There we go. Finally. Okay. So when we started doing the micros again, going back, let's see, going back to, when did we really start doing them again? So we traded a lot of stocks. Stocks is where we really started getting our money back, because like I said, we pretty much burned through all of our profit year to date, pretty much came back to a little under break even on the portfolio, and then we started trading a whole lot of stock, and just slowly kind of chopping, and just getting a little bit back. Traded to Netflix. Boeing was one of our main winners. Boeing, as well as Starbucks. SPXL was another one, and TQQQ. That one I've been on for a while. You guys know that we've been trading that a lot. Dollar Tree, another one that we've traded. Home Depot. I mean, we were doing a whole lot of different things, really. And then we started doing, of course, a little bit of SPY, bought some of that stock, and then, of course, a couple vertical spreads here and there to hedge our positions. And then finally, we started deciding to go ahead and hop into the micro futures again. And then, like I said, it took a little bit to really get used to it again. We were kind of debating, okay, and this is where we really started to kind of find out what was working best for us, because at first we started trading the Russell 2000, which went good for a couple days, and then we started getting way too complicated with our hedges and whatnot. We ended up at one point having 4 shorts and 5-6 longs. I mean, it was just I was getting way too many contracts for my short side, or even my long side when the long side was my hedge, and it just got way too many contracts way too quickly, essentially. And also, the Russell 2000 is its own beast. I wouldn't necessarily recommend people trade it, in all honesty, unless if, say, you're pretty long on the S&P 500 or the NASDAQ or something, and you just maybe want to hedge your overall portfolio with maybe 1 or 2 Russell 2000 shorts, because if the market goes down, Russell 2000 tends to move a lot. It's a lot more volatile. So say the overall markets are down 1%, there's a good chance the Russell 2000 might be down as much as 2 to 4%. So maybe in a case like that, I don't even do that personally. What has worked best for me so far over the last few weeks now is what we did here. What we tend to do is we tend to go long on the contract that is out about 6 months. We don't buy the current contract. We buy the contract that is going to be next out. So right now we're in the September contract, which is the MESU, and then the MESZ. Sorry, hopefully y'all don't hear the dog down there. She's protective of the puppies. But then you have the MESZ, which is the December 2020 contract. So we buy the December 2020 contract to go long, and then we hedge it with the shorts of September. So that is what's been working, and as you can see, these are the actual specs right here: December, September, December, September, etc., etc. And that is what has pretty much worked well for us, or I say for us, more so for me. It's what's been working for me the most. And like I said, we do some stocks here and there, Boeing, Chewy, that kind of thing. Some options here and there, as you can see. But for the most part, we have been pretty heavy on just simply averaging in. As you can see, we average into these MESZ contracts, and when we're starting to go short, same thing. We'll start out with usually just one short. I am very, very, very skeptical when it comes to adding to shorts, because I know that over a longer period of time, of course, the market's going to try to keep going up. If you don't believe that, just look at a 100-year chart, of course. But whenever I see an obvious trend starting to form that we're going down, I will usually add a short here and there on a random pop, and then look for a rejection, and then maybe add another short. Usually, though, I don't have no more than around 2 to 4 shorts, max 4. I think I've only had 4 once, and it was very brief. May have even been just 3, but usually somewhere around 1 to 3 shorts at the max. And that's when, like, I think the market's just completely overshot to the upside, like either yesterday or the day before. When the market was up like 6 days in a row, I was like, all right, we're due for some sort of a little pullback. Let's go ahead and add a couple shorts. We had 3 or 4 longs at the time, so I wanted to have 2 or 3 shorts just to hedge that. And then, of course, we took that profit, which was very minor. It ended up only being like a $30, $40 profit overall, because, again, it's a hedge at the end of the day. We're not looking to make a massive profit on our hedge. In all honesty, we'd rather the hedge lose money, because then that means that our longs, because we're always going to have more longs than shorts, of course, because the shorts are just our hedge. If our longs are up $1,000, then our shorts are probably only going to be down a couple hundred, and then we have a net profit of, say, $600-$700. So that is what we prefer. But if the market goes down, then awesome. We'll just buy longs at a cheaper price, and we'll close those shorts for a minor profit as well, and then wait for it to go back up. And that essentially is what we've been doing, and it's what's worked the best. You can scroll through. Like I said, I'm not going to explain trade by trade, but you can pause the video, take screenshots, and just add up the overall profits, losses of each trade. We were actually down at one point because we actually had to hold, I forget when. It was like right as I was going on my vacation, which was the 26th. We actually had to hold some longs for a while. We were down pretty hefty at one point on our longs, and we just slowly but surely added into them. And obviously the week of the 4th of July, the market just boomed to the upside, and then we made over $3,500, or not over, right around $3,300 to $3,500 the week of the 4th of July. Our account was actually down all the way to somewhere around $10,000 to $10,300, and then we just came roaring back to where we were actually up. Like I said, to start this week, we were up to over $13,300 or $13,400. So last week was an amazing week for sure, but it took a while, because obviously when we go, again, like we said, when we saw what was going on, I mean, the market was kind of in this downward move for a minute, so we had our hedges. Our hedges were up, I don't remember how much, like $100 or so. We sold the hedges. We went pretty much long. We had one short remaining in case if we decided to break this support, we were going to actually go real short at that point. If we broke the 29.75 level, we were going to go heavy short because we knew there's a possibility we could retest 2800 at that point, possibly, but thankfully we didn't. We held the longs, and then we profited pretty nicely on the move up. We actually sold way too soon. Hindsight's 2020, but I'd rather sell too soon and cover profits versus hold too long and end up being wrong, of course. So it's going to be very interesting, though, just to see kind of what the market does. Like I said, right now we're pretty neutral. In all honesty, I wouldn't mind if the market pulls back. I would love to see the market retest that 3100 to 3110 level, to be honest. If we test that level and we bounce off of it, I will probably load up with at least, at the minimum, 2 or 3 long contracts and wait for 3180 to 3200 again, because let's pull out the calculator here. And by the way, if you guys have any questions or anything like that, that's what I have that chat box pulled up for. So definitely, if you have any questions or anything at all, just shout it out there in the chat. But if we could get in at best case scenario, say 3110, which obviously for the December contract is going to be about 10 to 12 points less, so you're talking 3100 essentially, but we'll just go with 3110 to keep it simple. 3110, so we drive it up to 3180, that'd be 70-point profit, because we're swing trading these. We're not really day trading too much, in all honesty. Occasionally we'll scalp our hedges. We'll use the September contracts to scalp here and there whenever it's a really volatile session, but more times than not we're just swing trading more than anything. So 70 points, or let's say I'm half wrong. Say we get like 40, which obviously 35 is half, but let's say we only get 40 points per contract, average times 5. Say we got 4 of those contracts, $800. Let's say our hedge in the meantime, say we had our one short. That means that hedge would be down, because our hedge is usually, that's the other thing. We don't put our hedge on at the exact moment that we go long. So a lot of people think, okay, well, you're down 40 points, that'd be $200. No, we usually already have the hedge on. Like right now, my hedge is on, and it's at, what is my hedge at, actually? Let me pull it up here for you guys. My hedge is at 31.39 is where my hedge is. So like right now, the hedge is down about 30 points, essentially. No, about 20 points right now. So the hedge is usually already placed. So say hypothetically my hedge is down $100 essentially, which is usually what the hedge is down. That's about what it's down right now, actually, is around $100. So say the hedge loses you $100, you're up $700 essentially. But again, let's say that I'm like half wrong or something. Say you are down $200, whatever. You're still up $600. Boo-hoo. Not bad at the end of the day. That's actually about what we are up this week so far, and it's only Wednesday. So I'm happy with that. $600. We started out the week with, let's just call it $13,350, because we were actually up around $950 earlier today. So let's say we just end there on the week. That would be another 4.4% profit on the week. So I will take that every single day. My profit target is only 1 to 2% a week. I'm not somebody that takes on a whole lot of risk. I just look for golden opportunities in a given week. I look at the daily chart in a longer term aspect, because obviously, like I said, we're swing trading these usually for a couple days, sometimes a day or less, but usually a couple days is what we're holding these longs for. But honestly, for the most part, the charts I look at are 15-minute, our 1 hour, and our 4 hour. Occasionally I'll take a look at that 1 minute and 5 minute, like I said, if we're doing some scalping with the hedges. But the ones I really focus on the most are the 4 hour, the 1 hour, and the 15-minute, which is why actually I exited all of my longs right after we opened this evening, because I was looking at that 15-minute chart and I was like, man, we could definitely be getting ready to go down here. And I got out right before we had our MACD cross. If you don't believe me, let's just take a look. As you can see, we sold them at 5:45 p.m. for a solid profit. And when we go take a look, where did 5:45 p.m. happen to be? Boom, 5:45, right there, right as we were crossing. So, like I said, you just gotta, at the end of the day, I mean, don't pay attention to all these lines and all this. The main thing that I'm really looking at is our RSI or MACD on our 15-minute, 1 hour, and 4 hour. Now, when it comes to finding resistances and supports, that's a whole different topic. That I look at the 1 day chart mostly, the 1 year, 1 day. And a lot of times, obviously, you can draw out your fancy little lines. I don't do that too much personally when it comes to drawing out supports and resistances, but I will point out this level right around 31.20. That is where I think our key support is probably going to be. Like I said, I would love to see us retest 3100 to 3110, even 3090, because 3090 seemed to be a critical support before we really started bouncing up last week. I don't think we're going to hit that. I think this 3020, 3015 level, maybe even 3025, pretty much between 3015 to 3025. I think that's probably the lowest they're going to pull it down, unless if, of course, we get some more ridiculous news come out, and then by all means, we could obviously continue lower from there. But I think they probably pull it back to about 3020, in all honesty. And if it does, I'll probably add one contract, maybe two, depending on how bullish we look at that point. Obviously, we have job data, or what is it, new claims data tomorrow morning. That'll be interesting to see if that brings the market down or pulls it up. History shows that it's probably going to pull it up. So if the bears are going to pull this thing down, they better get on it overnight tonight. Yeah, like I said, 31.15 seems to be the bear scenario. In all honesty, if they can break 30.15, then yeah, they could probably pull it down to at least 3100. And like I said, worst case scenario, you're probably talking around 30.25. So you're talking about 140 points to the downside. And that's why I'm pretty neutral, because they could pull it down. If they pull it down under 31.15, they could catch some steam, and they could definitely retest the lower end of the range. So that's why I'm pretty neutral overall. Slightly, very, very, very slightly bearish in my current positions, but as you can see, we got a lot of buying power. We have cash to put, well, I wouldn't say a lot, but compared to my account size, I mean, we literally have pretty much most of the account available, essentially, to put to work. So we are ready to do so, and we'll just have to see what happens. But like I said, hopefully you guys did enjoy the stream. I don't know. Hopefully the stream's been doing all right for you guys. Like I said, if you hit the thumbs up button, it helps the channel out a lot. I appreciate it tremendously. Cannot stress enough how much I appreciate you guys. And like I said, I apologize for kind of going on a hiatus the last 3 or 4 weeks, 2 to 4 weeks. Those of you in Discord know that I haven't gone anywhere. It's just, like I said, I mean, we had puppies out of nowhere that we had no idea about. Our dog is literally about this big. Didn't even think she was capable of having puppies or when she got knocked up. But had that happen. And then, like I said, we were on vacation for about 7 to 10 days. So had a lot of little things going on over the last 2 to 4 weeks. And now we are back, trying to get back in a routine. So like I said, we will do our Sunday stock talk coming up this Sunday. So definitely hit the subscribe button below if you're new. Hit the bell icon. That way you'll be notified when we go live or upload another video. And I will see you guys Sunday. And like I said, if you're not already in our Discord group chat, hop in there. We'd love to have you there. It's awesome to see that continue to grow. We had like 4 of you join today alone. So it's awesome to see that continue to grow. We'd love to have you there as well. But until next time, take it easy, guys.